Welcome back to the final presentation of the first day of the MPP Policy Lab presentations for the class of 21. My name is Chris Reagan. I'm the director of the Max Bell School. And I'd like to start by saying that I am speaking to you today from my home in Gimli, Manitoba, which is situated in what is referred to as Treaty 1 territory, the traditional lands of the Anishinaabe. Now, many of you are actually closer to Montreal's downtown campus, or McGill's downtown campus in Montreal, in which case you are on the traditional territory of the Kanikahaga, the Mohawk Nation. But wherever you are currently sitting, I encourage you to better understand the history of your location and to recognize its Indigenous heritage. Now, I'd like to just briefly give the rules of engagement, but I know I've said this 3 times today. The team will have 30 minutes for their presentation. There are no extra points gained for finishing your presentation before the egg timer goes, okay? The egg timer will go at the 28-minute mark, and then you'll wrap things up in the final 2 minutes if you get that far. Then we'll have 10 questions from the faculty, no more than 2 questions each, and keep them snappy. Then 10 minutes for Q&A from the sponsors, and then 10 minutes for general Q&A. So I encourage you all, actually, faculty or sponsors or neither of the above, to put your questions in the chat box so that I can then moderate the conversation later on. So without further ado, let's turn it over. Our sponsor is Engineers Without Borders, and the challenge is what needs to be done for Canada to harmonize its equity crowdfunding laws and regulations to allow for cross-border equity crowdfunding, specifically for Canadians in Kenya as a complement to remittances. Okay, long question, interesting issue. Without further ado, team Engineers Without Borders, take it away.
Can everyone see my screen? Excellent. Thank you very much, Professor Reagan, and thank you to everyone for joining us this afternoon for our Policy Lab presentation. My name is Danielle Apavu, and I'm pleased to introduce my teammates, Asif Khan, Camilla Liu, and Yvette Yakibonke. We'll start with a quick overview of our policy challenge, the one that we were presented with. We were asked to evaluate the regulatory and investment environment in Canada and Kenya for cross-border equity crowdfunding as a means for Canadians to invest in small and medium-sized enterprises, or SMEs, in Kenya. Here's our roadmap for our presentation today. We'll start with a bit of context, followed by 6 sections detailing our analysis. And finally, we will give our policy recommendations. Cross-border equity crowdfunding, or ECF, as we will refer to it in this presentation, is a relatively new and innovative concept when it comes to investing. So to define it, we'll break it down into its terminology. Crowdfunding means that it is the use of small amounts of capital from a large number of individuals. The equity piece means that it is different from donation or reward-based crowdfunding because with an equity stake in the company, contributors have a vested interest in the success of the companies they are providing capital to. And lastly, the focus on the cross-border element is important because it means that capital is flowing from investors in one nation to another, such as from Canadian investors to emerging markets in Kenya. We view cross-border ECF as a potential tool for international development. Canada has championed innovative financing as a method to achieve the UN Sustainable Development Goals. This includes increasing private capital to support development outcomes in emerging markets. And we believe cross-border ECF could fit this category of financing. We were asked to examine Kenya as the country that would be suitable to receive this investment. As one of the fastest growing economies in sub-Saharan Africa, the largest economy in East Africa, and a country with a fast growing population, Kenya has a high potential for growth. However, the country still faces some significant socioeconomic challenges. Kenya's SMEs, especially those with a social cause, are trying to address these challenges, but they face a lack of financial support. This calls for alternative financing mechanisms. So this is where we see a great potential for cross-border ECF to help these sorts of businesses grow. Now we'll move on to discussing the Canadian regulatory landscape for cross-border ECF. Securities regulation in Canada falls under provincial jurisdiction. There's no single national regulator. However, there is a degree of regulatory coordination through national and multilateral instruments. The provincial securities commissions are self-funded independent crown corporations, and each is accountable to their respective ministers of finance, and through their minister, the provincial legislature, and therefore the public. When it comes to regulator attitudes towards policy change, it's key to recognize that they are primarily motivated by minimizing risk to investors. Investor protections are first and foremost in all of their respective mandates. To understand the barriers that a Kenyan SME may face when trying to raise capital from Canadian investors, it's useful to explore the various rules for doing so. As mentioned on the previous slide, investor risk is a key consideration. So regulators offset investor exposure to risk with increased considerations for protecting the investor, such as disclosure requirements and limits on how much can be invested. Filing a prospectus is the highest standard for disclosure. It requires the public filing of a detailed disclosure document and ongoing reporting of audited financials, which is costly and time-intensive. Certain types of companies, such as SMEs, may not have the resources to fulfill these requirements, so regulatory exemptions exist so that these companies can avoid the prospectus requirement. However, qualifying for a regulatory exemption comes with its own set of requirements to varying degrees. We explored all the exemptions in more detail in our brief, but we've highlighted a few here that are relevant to this case. Ultimately, though, the current prospectus exemptions in Canada are not well suited to the needs of Kenyan SMEs. Amending the prospectus exemptions in Canada could be a potential mechanism for facilitating cross-border equity crowdfunding. Yvette will now cover global case studies for ECF regulation.
Thank you so much, Danielle. So I'll continue on with a brief overview of some global practices, highlighting more specifically equity crowdfunding regulatory frameworks found in the European Union, the United States, and the UK. Now let's begin with our global perspective. Regulatory frameworks vary from country to country. So because priorities differ, regulators have diverging approaches. There are more and less prescriptive regulatory frameworks that characterize investor participation in this sector. First off, I'll focus on the EU and the United States. The regulatory environment for crowdfunding in the EU has faced similar challenges to that of the Canadian system. More specifically, fragmentation and differing regulatory crowdfunding frameworks tailored to local market and investor needs across the EU has also been a significant barrier. In turn, this has led to high compliance and operational costs, which has made it difficult for crowdfunding platforms to scale their services effectively. Now, in the United States, the main challenge has been its overly restrictive regulatory framework, particularly restrictions placed on internet sales of securities by the Securities and Exchange Commission because of rising concerns over the possibility of fraud and the need to protect investors, and only allowing high net worth accredited investors who meet wealth requirements these investment opportunities. So these points have largely prevented the expansion of the crowdfunding market in the US. There have been efforts in both of these countries to ease restrictions and further facilitate the development of the crowdfunding market. In the EU, efforts to harmonize regulations and address existing barriers for crowdfunding began in September of 2015. Then November of last year, the European Parliament adopted the regulation on European crowdfunding service providers for business, creating one of the most harmonized regulatory environments for crowdfunding in the world. Through the ECSP, lending and equity-based crowdfunding services are uniformly regulated across the EU. So the ECSP also established a passport system for platforms that facilitates cross-border operations. There's a more detailed description of the regulations adopted vis-a-vis investor protections, risk management, and cross-border operational barriers in the brief, but essentially the harmonization of minimum operation requirements through the passport system is what has helped to eliminate the barriers preventing platforms from operating in more than one jurisdictions. Many of the regulations are still relatively new, and the EU is very much in a transitional period. But overall, that passport system would be beneficial to the Canadian system here. In the US, the Jobs Act, the new Securities and Exchange Commission's regulations passed in 2015, and the regulation crowdfunding, also known as Title III ECF, passed in 2016, have largely facilitated crowdfunding in the US. These laws have allowed for interstate equity crowdfunding, the easing of securities restrictions for SMEs, facilitating their access to funding. These regulations have opened the doors to non-accredited retail investors. And they've also created a new intermediary entity, which is the funding portal, which companies are obliged to use in order to ensure their compliance to securities law. Also, recent modifications to regulation crowdfunding has allowed for test the waters provisions, allowing them to evaluate the effects that minor changes in the crowdfunding regulatory environment can have on the market. The test the waters provision is something that Canada should also experiment with. Now, with the United Kingdom. On the other hand, the UK is one of the few countries that has found a way to successfully regulate non-conventional ways of funding, like ECF, making them somewhat of a pioneer in this area. They have the most developed ECF industry in the world, with the highest market volume per capita in crowdfunding in Europe. It's also the second fastest growing sector in the UK economy. Now, they have a very principle-based, light-handed crowdfunding regulatory environment that has allowed for the evolution of crowdfunding policy in collaboration with its various stakeholders. Now, what I mean by light-handed crowdfunding regulations is simply that the oversight of equity crowdfunding by its regulatory body is just relatively more relaxed than it is in other countries. For example, in the UK, platforms are rewarded for doing a substantial part of the heavy lifting when it comes to screening companies efficiently, because they do have incentive to build trust with investors and build their reputations. So a lot of the UK success can be attributed more to these commercial realities than to prohibitive or heavy-handed regulations. There's also tax breaks, tax incentives that have been established to encourage investments in SMEs and stimulate the economy. Now, as a result of the principle-based and much less onerous crowdfunding regulatory environment, the fact that UK platforms are rewarded for doing a lot of the work, they've grown the market exponentially. Canada can also benefit from incentivizing platforms, allowing for more flexibility in its framework. As I mentioned, equity crowdfunding regulations differ from country to country. By analyzing these different approaches, we can see which regulations are most conducive to growth and which ones are overly restrictive, which can help countries like Canada avoid creating barriers to their economic growth and development. So with that, I'll pass it on to Camilla, who will continue with Kenyan SMEs and social enterprises.
Thank you, Yvette. Now that we learned about the regulatory conditions, we want to analyze the investee, the Kenyan small and medium enterprises. SME is a key sector that creates jobs in Kenya, and social enterprises is a component of this sector, and they're fast growing. The British Council survey in 2017 found that more than half of the Kenyan social enterprises made a profit, and close to 70% used profit for development purposes. Social enterprises can help Kenya address main socio-economic challenges, such as high unemployment rate among young people. Many social enterprises are led by young people, meaning they are strengthening leadership skills of the new generation. They tend to hire young people, which in a way reduces youth unemployment rate. Many of them also train young people to improve their employable skills. Other areas of social challenges are food insecurity and lack of access to health services in the slums and rural Kenya. COVID-19 have made these situations worse. For example, households in the slums of Nairobi are not getting enough food and primary health care. Some SMEs have stepped up to help. For example, a Kenyan startup that we interviewed called Tibu Health is offering online booking of health services where clients can book a healthcare professional to come to their homes and perform checkup. Telemedicine would be a viable option to provide care to remote communities and would be an area for potential impact investment. And the good thing is that Kenya has strong internet connectivity, and this would really enable SMEs who are digital innovators to flourish. All of this is to say that Kenyan social enterprises have unlocked potential to make more impacts to the society. But they face a big obstacle, and that is the lack of access to capital. SMEs are often perceived to be highly risky by investors, even if they do make a profit and create jobs. For the same reason, it's harder for them to get a commercial loan. Also, many social enterprises from the rural area don't get access to the funder networks that are largely located in urban centers. Possible solution to fill this financing gap? diversify investment flows, and use tools like cross-border equity crowdfunding to allow these enterprises to have direct access to investors from the developed world. In this paper, we included some investment considerations for equity crowdfunders by identifying investment risks and ways to mitigate risks. We have looked at 3 broader investment aspects of Kenya as a country. Overall, Kenya is relatively safe to invest in by looking at foreign investors' confidence, political stability, and legal environment for investors' protection. But investing in SMEs come with high risks. This is common not just in Kenya, but in many jurisdictions. In terms of Kenyan SMEs, we found some commonly perceived investment risks. These include possible theft by employees, lack of technical expertise by management, customer retention, and a few others listed here. We also need to consider how government security regulators perceive risks of ECF for emerging markets. They are generally concerned about fraud, failure of crowdfunding platforms, and a big one is information asymmetry. So what about ways to mitigate these risks? We have identified 3 strategies to protect investors. The first essential step is to conduct due diligence. This means evaluating owners, managers, and employees of the business, their affiliation with the communities they serve, history of fraud and debt, and etc. The second strategy is to maximize display of details about each business on the funding platforms. This would address the risk of information asymmetry. And the third one is to encourage investors to split their investment into smaller amounts as a way to prevent critical loss. This takes us to an assessment of Canadian investors of Kenyan SMEs. We want to know, is it possible to include retail investors into the impact investment space? The current impact investors in Canada are organization-based, such as private companies, foundations, and public sector. Most financial organizations design impact investing products only for accredited instead of retail investors. However, the number of retail investors in Canada has been trending up significantly since the pandemic. Surveys have also shown that many Canadian investors are interested in responsible investment portfolios and care about social impacts that businesses make. In a nutshell, there is a public sentiment to enlarge the impact investing space to include retail investors. One problem that needs to be addressed is information gap. Surveys have shown that half of retail investors have no adequate knowledge about impact investing. Therefore, it is necessary to first educate potential investors about impact investing through cross-border ECF. And now we'll go to Asif.
Thank you, Camilla. It does seem to be a good idea to target the diaspora for cross-border crowdfunding because the diaspora already has an inherent knowledge of the local socioeconomic conditions and business environment. They're also more willing to invest in small-scale but beneficial initiatives that the foreign investors might consider as high risk. And these have been confirmed in our interview with the Canadian Association. They were quite enthusiastic about the prospect of investing in Kenyan enterprises. According to the 2016 census, there were about 27,000 Kenyan immigrants in Canada. The number might have gone significantly since then. So there's a considerable presence of a diaspora crowd to tap into. Now I'll talk about the crowdfunding and equity crowdfunding scene in Kenya. So Kenya is the most active crowdfunding nation in East Africa, with around $22 million raised in 2015 and a rapid projected annual growth of 50% during the pre-COVID period. This vibrancy is due to its relative advanced economy, infrastructure, internet connectivity, and mobile money use. Also, crowdfunding is well attuned to the Kenyan notion of harambee, which in Swahili translates to let us pull resources together. Traditionally, harambee has been used to fundraise to support community initiatives, such as to establish schools, hospitals, and churches. Kenya is also home to Mchanga, the largest online crowdfunding platform in Africa. Mchanga tapped into the notion of harambee and launched online campaigns that raised millions of dollars for medical support, drought relief, among others. Interestingly, a major portion of the funding for crowdfunding in Kenya comes from funders outside of the country. For example, in 2016, 35% of Mchanga's funds came from members of Kenyan diaspora. Equity crowdfunding, however, accounted for only 1% of Kenya's crowdfunding ecosystem in 2016. The low adoption is primarily due to a lack of a regulatory framework. On the other hand, donation-based crowdfunding accounted for around 2/3 of the market activity. So overall, it is obvious from our research that Kenya does have a great potential for crowdfunding, but equity crowdfunding as a concept is at a very early stage in the country, and the current absence of regulations has not helped in its growth. We talked about the absence of regulations in Kenya, so let's look more into the details in terms of what it actually means. So the World Bank considers regulatory framework as a precondition for takeoff of equity crowdfunding as it increases investor confidence. But in the absence of legislation, the Capital Markets Authority, CMA of Kenya, regulate the alternative financing in the country. CMA is under the legislation of the Capital Markets Act that stipulate activities involving securities. But one positive sign is that the Kenyan government is generally favorable to the prospect of equity crowdfunding. Particularly, CMA has been cooperative with the African Crowdfunding Association, ACFA, which was founded by foreign donor support to harmonize crowdfunding regulations across Africa. It developed a unique regulatory framework, which is the ACFA level framework that can be adopted by default by any African country looking to develop crowdfunding as a capital market tool. Kenya has adopted the framework in 2020. So it is too early to tell to what extent the framework will be operational in Kenya. But in the meantime, equity crowdfunding platforms can take advantage of two avenues for their operation. One is the de facto tolerance of the regulators. Basically, the lack of regulation means no restrictions in investing in equity crowdfunding. The second is the CMA regulatory sandbox, which allows for innovative services to operate in a tailored regulatory environment to test out the product. Notably, in October 2020, CMA greenlit Presetsa Africa, a debt-based crowdfunding platform to operate in the Kenyan capital markets. A regulatory framework for debt-based crowdfunding is now in the pipeline. So to sum up this section, the regulatory sandbox shows the government's clear intent to support alternative financing and to create favorable regulatory environment in the country. Next, I'll talk about the cross-border investment dimension of equity crowdfunding. As per our findings, there are no formal regulations that prohibit cross-border investment in the form of equity crowdfunding in Kenya. It's because the government is actively seeking to draw foreign investment as a national development strategy to become a middle-income country by 2030. To achieve the goal, the government initiated the investment policy to draw foreign investors. The other foreign investment-related legislations includes the Companies Act. Kenyan businesses looking to advertise in a Canadian platform or any foreign platform will be liable to this act. There's also the Foreign Investment Promotion Act that protects foreign investors' rights and interests from violations and frauds. However, it is to be noted that these legislations do not specify small equity investments, and it is unclear from the policies what provisions are there to protect this type of foreign investments. And Kenyan SMEs participating in foreign crowdfunding platforms will also be subjected to 30% tax, 3% turnover tax, and VAT if the company has an annual turnover of about approximately $46,000. Next, I'm handing this over to Daniel to take us to the recommendations.
Thank you very much, Asif. So I'll start with our first recommendation, which is targeted at the Canadian regulatory framework. We are recommending to advocate for regulatory change to address the limitations in Canada's prospectus exemptions. We are recommending a rethink of the rules in a sense. We want to rethink the rules in a way that makes these exemptions more open and accessible. And we've identified two potential targets for revision. First is revising the startup crowdfunding exemption to allow it to be used by Kenyan businesses, not limited to only Canadian businesses as it is currently. And second, the accredited investor exemption could be revised to allow individuals to qualify as sophisticated investors by criteria other than financial wealth. This is already being rolled out in some sense in Alberta and Saskatchewan, but it is only available to Alberta and Saskatchewan-based investors and companies. So this is really a way to democratize the investing space by allowing, by opening that space to those who do not simply just have high net worth, high assets, and high income. Our second recommendation is to conduct further research to evaluate the demand for policy change in this space. This includes interviewing diaspora populations, as well as conducting sandbox experiments with regulators to really get a sense of the need for this type of policy change. As this is really an industry that is in its infancy. Something that we heard consistently from the regulators that we spoke with, the Canadian provincial regulators that is that they serve the people of their province. So in order to pursue policy change, they need to hear it from their constituents. So gathering this type of information is a critical activity to demonstrate to the regulators that there is a want and a need from Canadians to change policies in this regulatory space. Camilla will now continue with further recommendations.
So the next three recommendations are about what can ECF advocates do to mitigate risks, protect the investors of this kind, and help businesses raise funds. We summarize the answer into three items. The first one is to have a large extent of clear and transparent information display on the platform about fundraising businesses. Our research shows that many Canadian investors don't know much about impact investing, although there's an appetite for it. This leads to regulators concerned about misleading information. Therefore, elements to display on the platform should include upfront and repeated messages about the high risks of investing in SMEs in emerging markets. It's important to disclose most of the assessments of the businesses from the due diligence process. Also, platforms should encourage investors to diversify their ECF portfolio and only invest in an amount that they can afford losing. Another recommendation for ECF advocates is to pursue blended financing. So the basic concept is to use development funds from the public sector to attract additional finance from the private sector in order to together achieve SDGs for developing countries. International organizations like the IFC and the UN have been working with national governments, such as the Government of Canada, to implement blended financing projects. Cross-border ECF in Kenya matches very well with the purpose of blended financing. If used well, this model can mitigate investment risks for individual investors by partly addressing early-stage businesses' financial needs and increase their chance of success. The funds can also support platforms' operation. Therefore, ECF advocates should connect dots between the provincial and the federal governments and seek blended financing support from the government. The next recommendation is to showcase social impact and establish evaluation strategies to measure impacts. And the goal here is to raise trust from investors to sustain platforms' business. As we mentioned previously, Canadian investors tend to align their moral values with companies that they invest in. Therefore, showcasing the business's social impact is an essential marketing effort to appeal to investors. If we look at Kickstarter, the most popular reward-based crowdfunding sites, businesses who generated lots of supporters are those who provided dynamic content about their impacts and granular details about themselves. It is also important to monitor and report back impacts to investors for a set time frame to gain their trust and sustain investments. With that, I'll go to Asif.
It is obvious that there are some considerable challenges to get cross-border equity crowdfunding off the ground, and it will take considerable time and resources. In the meantime, donation crowdfunding can be an immediate alternative step to support Kenyan SMEs. Donation crowdfunding, essentially synonymous to Harambee, is the most popular form of crowdfunding in Kenya and is easily communicable to a wide range of investors within Kenyan diaspora and beyond. Donors or investors in donation crowdfunding do not expect or less concerned with the return of investment, but contribute based on their willingness to support their communities and enterprises in Kenya. Plus, it has less complicated regulatory requirements, meaning that it can immediately capitalize on Kenyan diaspora's interest to contribute, while the challenges of equity crowdfunding are sorted out. Handing it over to you, Yvette.
Wonderful. Now, billions of dollars in remittances and donations will continue to flow to developing countries each year from the diaspora. While capital is flowing abroad increasingly, innovative and early-stage companies in many developing countries, especially in sub-Saharan Africa, and as seen in this brief, in Kenya still require more investments, particularly from non-risk-averse investors, to positively impact their communities. In Kenya, ECF has the potential to stimulate innovation and reduce poverty. It can also boost growth by eliminating the constraints of traditional capital market structures and regulatory challenges. This policy brief analyzed this crowdfunding regulatory landscape in Canada and other jurisdictions, and specifically focused on how Canadian investors could support Kenyan SMEs and social enterprises. Despite regulatory challenges, there is excellent potential in Canada for regulatory change. By implementing the innovative recommendations we've made, Canada is well poised to make great strides in the area of equity crowdfunding. In addition to aligning with Canada's commitment to UN Sustainable Development Goals, cross-border equity crowdfunding is an innovative way to support emerging markets everywhere. Now that concludes our presentation. Thank you so much for your time. We hope that you found our research insightful. A special thank you to EWB for presenting us with this policy challenge and their continued support, and to Dirk, our coach, for his invaluable guidance. And I'll pass it back to you, Professor Reagan, to open the floor to questions.
Thank you, Yvette. Thank you, team. Terrific presentation, fascinating issue, and you beat the egg timer. Well done. Okay, so we are going to turn it over to faculty questions. I'm going to start with Ken Bosenkool, and then Natalie, and then Jennifer. So Ken, take it away.
I'm going to do a little role play here. I'm going to pretend that my name is Grant Vingo. Now, Grant Vingo is the chair of the Ontario Securities Commission. He has 20 years experience as a lawyer in regulatory matters related to securities commissions. Now, let's suppose that we just got onto an elevator and you have 42 floors to say to me whatever you'd like to convince me that this is something I should think about. I have a little timer here that will tell us when we've reached the top floor. And when we reach the top floor, you'll have to stop talking. So I'll give you just a second to think about who's going to take this. And then you'll have a minute and a half to tell me, Grant Vingo, the chair of the Ontario Securities Commission, why I should pay attention to your issue. When you're ready, and I'll start my timer. I'll start by introducing myself. So tell me when you're ready and I'll start.
Great question, Grant.
All right, are you ready?
Oh, yeah, I'm ready.
Okay. Hi, I heard that you and a few of your colleagues have written an interesting report about crowdsource funding. Tell me more.
Absolutely. Equity crowdfunding is an innovative and very relatively new method of financing. It connects retail investors with startup stage companies, avoiding a lot of the regulatory barriers and onerous reporting requirements that traditional investing requires. However, given its somewhat high-risk nature of this type of investing, as well as the regulator, as you know, general focus on minimizing risk for investors, there's a sort of a natural conflict that arises there. So while we think that the OSC particularly should be interested from the perspective of their Office of Innovation, this is a way to, is a very innovative fintech area that could be a way to provide support to small and early stage companies globally, not just in Canada, and also to allow agency to Canadian investors to decide what they want to invest in and decide where they can make impact with their funds. And finally, it can help to advance Canada's standing globally and Ontario's standing as well by driving change in emerging markets and allowing private investors to drive that change as opposed to traditional development investment.
Well, that sounds very fascinating. Here's my business card, and now the elevator door is opening, and we will see you sometime. Give me a call.
Hold on, Grant. I've just been told that you forgot your briefcase down in the lobby, so you actually have to go back down 42 flights. So do you want a follow-up question on the way down?
What should the Ontario Securities Commission specifically do to enable this funding? My timer has to stop.
Yeah, I can expand a bit more on what I mentioned there, which was the innovation office at the Ontario Securities Commission. Now there are parallels at other securities commissions, such as Quebec has an AMF fintech group, but those type of offices, and we've spoken with the OSC Innovation Office, they do have resources to provide small scale tests to simulate how a policy change may work on a larger scale. So this is an excellent type of opportunity for something like cross-border equity crowdfunding platforms to test out how, expanding that startup crowdfunding exemption, for example, to allow Kenyan-based businesses to test it out on a smaller scale and provide support to that kind of sandbox type of experiment, which is something that we've included in our recommendations.
Thank you very much. Here's another card. Give me a call.
Okay, so while Ken waits for his elevator to go back to the 42nd floor, let's turn it over to Natalie. Natalie Duchenet for a couple of questions.
Thank you. Thank you, team. So I have two questions. One, I think, is a simple question, and the second is a sidebar question. So my first question is around the exemptions for friends and family. So you speak of this in your brief, and you spoke briefly of it in your presentation. This notion of friends. So I was just wondering how broad is the definition of friends as part of this exemption? And, can I be somebody's friend for the purposes of investing in their company in Kenya? That's question one. Question two, especially in your coverage of Kenya's need for capital, it seems that there's a real case for the development, the creation of venture funds and institutional investment in Kenya, particularly for SMEs. I realize it wasn't the focus of your work, but I just wondered if through the course of your research, you saw similar insight about the growth or development of venture funds, either Canada-based or North American-based venture funds, focusing specifically on countries like Kenya or other areas in sub-Saharan Africa. Thank you.
You can go ahead with an answer to your first question, which I believe was about the friends and family exemption, if I heard that correctly. Prospectus exemption? Yes, okay. So that exemption is quite similar to the accredited investor exemption. It is an exemption that allows somebody close to the business, you have to provide some proof of that, to invest without the company needing to file a prospectus or do other types of disclosure, such as an offering memorandum or a startup crowdfunding issuing document. So it's typically a way that if you have a small business and you want your family to be involved, it's a very easy way to facilitate that type of investing because it's assumed that you have a prior relationship with them and there's some trust established. The accredited exemption is similar, but different in that because of the investor's worth, financial worth, they are perceived as being able to withstand more investing risk because they have more funds available to them. So we haven't identified this as one to be revised. We don't think that this is one that the friends and family exemption has particular promise for cross-border ECF, mainly because there's that issue of connections, which is where we think the startup crowdfunding platform, the equity crowdfunding platform, has the potential to connect accredited investors or to connect retail investors with SMEs, but where there may not be that prior friends and family type of connection. So it's really about opening up the investing space to connect all sorts of investors, to have access to all sorts of types of companies to drive impact with their investment. I hope that addresses the question.
Okay, so who wants to take Natalie's second question?
I'll take Natalie's second question. So in terms of the venture funds and the other type of investors that we have not really focused on in our brief. So yes, actually Engineers Without Borders, they have a lot of venture capital, venture funds projects that's going on. That's their main focus. In Canada, the FinDev Canada, which is a Crown corporation that's focused on the, international development, they also do quite a bit of venture funds projects by recognizing SMEs potential in developing countries like Kenya, and there are quite a bit of private foundations. So yes, the venture capital is definitely out there and is pretty established. What we are studying here is if the impact investment space can be opened up to impact investors. So average Canadians like me and my teammates here. So there are some advantages here, which is that currently only high net worth individuals are allowed to take advantage of these type of investment in Africa. And countries like Kenya are going to grow. Their economic development is shooting up because of their vastly growing population. So now high net worth individuals have been already taking advantage and benefit from this. But what about retail investors? What about retail investors that want to get into investing in countries like Kenya but can't because of different regulatory barriers? So cross-border ECF would really open the door for retail investors and also allow them to contribute to sustainable development goals and Canada's international assistance abroad. Thank you.
Thank you. It's amazing to me that we don't allow low wealth individuals to invest in equity in small businesses in Kenya, but we allow them to purchase Bitcoin and lose half of their investment overnight. Anyway, that's we'll solve that problem another day, I suppose. Okay, Jennifer Welsh.
Hi, team. Thank you very much for that presentation. Two questions from me. I think it was Camilla who said you don't get policy change without creating demand. So in the answer to Ken's question, you were appealing to the regulator's reputational desire to be seen as an innovator. But the other source of pressure is from investors themselves. And I'm wondering if you can say more about whether you think you're stimulating demand or whether you're tapping into demand that already exists. And if it's the latter, do you have a sense of the size of that demand, particularly for developing countries? So that's my first question. The second kind of links to that. We do know that retail investors have become interested in climate change. And if we think about the moment we're in the COVID and climate change moment. I think the moment is very different from when you might have started a project like this 2 years ago. Did you think about linking this explicitly to SMEs that are involved in those two policy spaces as a way of tapping into latent demand or piloting, or did you just see this as kind of across the board, any type of SME?
Thank you, Professor Welsh. By demand, do you mean the demand from the Kenya side, like the?
No, the demand from Canadians who, despite the fact we say we're global, who are not very global in their thinking. The demand to actually invest in Kenya. So the demand to the regulator to change the regulatory environment so that they can do so. I was responding to your comment that says we get policy change if there's demand for it. So Canadians should be demanding this change. And I'm asking, do you feel you need to stimulate that, or does it already exist?
I think this does speak to our recommendation too, which for your first question, probably Danielle can take that. And for the second one, I can take. Danielle, are you?
Yeah,
Okay.
Speaking on that. So you raise a very good point, and that is one of the struggles of the equity crowdfunding platform industry globally, even in more advanced markets like the UK, is the lack of data on this. Because the industry really is in its infancy. So it's really hard to identify both the makeup of who is investing in these type of platforms and the willingness to, and understanding if there is a willingness to that just doesn't know. Like we've identified that both the regulator as well as the investor is not particularly well informed on this. It's a relatively unknown concept. So exploring that is definitely one of the, I think, the key first next steps, and that is something we've included in our recommendations to really evaluate the need. And what we found was an interesting area there that we think should be explored in terms of that type of further research, and maybe Asif can speak to it a little bit, is the diaspora, the Canadian diaspora populations, which he spoke to a little bit. Asif, did you want to add to that?
Yeah. Sure, Daniel. So yes, Professor, I think what as Daniel has mentioned, it requires a broader sort of an institutional study and survey to sort of scoop into the specific crowd that we can sort of pitch into for this idea. But one segment of the population that we did consult with is the Canadian Association, which is the diaspora community here. And they were very enthusiastic once we said that this is something we're considering. And as they have said, that they have been actually doing this sort of in a non-institutionalist manner to sort of support their community members in Canada to sort of get their resources together for health support and so forth. So they would want to take this opportunity if it was there to sort of invest in Kenyan businesses if the regulatory framework was sort of conductive.
I've got no questions yet from the people from Engineers Without Borders, so I'd like to use my director's prerogative to ask a question, if I may. There's discussion in this presentation about impact investment, and it comes up often. And I'm wondering if your recommendations, and for that matter, the scope of your project, applies only to impact investing and social businesses, because I can't see any reason why it wouldn't apply to just any old business that might be just interested in good old neoclassical profit maximization, if it was so interested. So is there something, so am I right in thinking that you're aiming this at social businesses and impact investment? And if so, why? Why is that a special type of business that you're thinking about?
Before we jump in and answer this one, did we fully address Jennifer's, Professor Walsh's second question?
I'm just reading that one now, so I apologize. So let's go to Jennifer's second question on climate change and post-COVID build back. I apologize for that. And then you can go to mine.
No problem. So I will address Professor Welsh's second question in terms of different themes of projects that we can invest in once platforms are built. I think it is actually important to definitely look into different themes. Climate change ties it ties very closely with the agriculture sector, which is one of the biggest sector in Kenya. Through our research, we found that things like droughts and floods would significantly impact farmers, their crops and their income. And especially during COVID, there's given the food insecurity, this is not related to climate change, but things like pandemic would also slow down the income of the agriculture sector and farmers. So I think there's definitely the opportunity to have what I envision having a platform is to have different sections and divide them by themes: climate change, gender equality, which is another thing that Canada is really championing in the world stage right now, is the gender equality. Just different themes, and then and different themes will appeal to different investors based on their interests. So I think that would definitely be a good thing to explore.
If I could just build on that as well, I think because of the pandemic, this gap that we've been talking about has widened. And again, as Camilla explained, we've seen that there's greater gender diversity in equity crowdfunding. So again, that just goes to support the fact that this can help to empower women in a lot of these countries as well. So I do think that the pandemic has widened the gap, but it's also made opportunities for equity crowdfunding in that way.
Quick follow-up on that comment, Yvette. Is there greater gender diversity both among the investors and among the recipients? I can imagine that it would be actually in both directions, so to speak.
Correct. Yeah. Mm-hmm.
Okay, so thank you for those questions, Jennifer, and I apologize for jumping in there before your second one. Okay, my question, is there something special about impact investing in social business, or is what you're doing here, could it be more general and apply to all SMEs?
I think you are right on both accounts. That would be my response. I think it's a good question. So no, I don't think our proposal is limited to impact investing, particularly the changes proposed to the Canadian regulatory framework are really about increased accessibility and allowing global investing and allowing that investing on a scale of the average Canadian to any type of business, but particularly this exists to help small enterprises that do not have the resources to file a prospectus. And then on the second point, though, it does have unique application for impact investing because generally, if those are smaller social enterprises that do not have the resources, again, to fulfill disclosure requirements and those sorts of ongoing, hiring of auditors, hiring of lawyers. So this has a potential to address the desire of retail investors to participate in that type of impact investing. And I think an interesting area that has some potential is that platforms, the equity crowdfunding platforms themselves, can develop different niches for investing. One of the platforms that we spoke with, a UK-based cross-border equity crowdfunding platform, which is just starting up, is it's called Nia Crowdfund, and their focus is on impact investing. But there's no reason you couldn't explore other focuses as well. But it centralizes if an investor is looking for a way to get educated about and look for a way to find companies. That is a way to connect a retail investor with a network of impact investing or other types of investing areas of small businesses or other types of businesses that may not have the resources to fulfill the prospectus requirements.
Okay, great, thank you. Okay, let's now turn to general Q&A from the general audience. So I've got Nayantara, and then Gina, and then Ken Bosenkool. And if nobody else jumps in, I will have a question about blended finance. So let's go to Nayantara.
Thank you, Professor Reagan, and thank you, team, for that insightful presentation. I had absolutely no idea about this going in, so I've learned a lot. It would also be interesting to know do you think Brexit has impacted the UK's success in equity crowdfunding? And I ask that because, even with the pandemic, we see that there are all these external events that happen and then that affect a policy change that we think is going to happen. So just learning from that, has there been any impacts through Brexit on equity crowdfunding that you know of?
Yeah, thank you so much for that question, Nayantara. I think I can jump in. For sure, it has and it will continue to impact the UK economy in general. I mean, most certainly, Brexit threw into uncertainty the status of London as a global financial center to begin with. International companies are less likely to use London as an English-speaking entry into the EU economy. And as a result of Brexit, the UK economy has slowed and many businesses have moved their headquarters to the EU. And so I'm sure that there's speculation on long-run loss of output. But in regards to equity crowdfunding, and if I can just touch on that as well, one of the key features of equity crowdfunding in the UK was the ability for it to be pan-European. So major UK platforms had operations in other European countries as well. And they could allow for investments from residents from any other EU member states as well. So the fact that Brexit has brought about conflicting regulations or even a perception of conflict, which can essentially remove the ease of access, which in turn makes equity crowdfunding more difficult. So definitely, although, the UK still has quite a huge market share when it comes to equity crowdfunding. So it might negatively impact, it most likely will negatively impact them, but at the same time, they're still well ahead of a lot of different countries. And if I can just finish with, we're still in a transitional period. So it's really difficult to be able to determine the extent of the impact, and especially also with the difficulties posed by the pandemic. It'll be only later on that we'll be able to know exactly what type of impact Brexit has had. But overall, I mean, Europe needs the UK and the UK needs Europe. So it's in both of their interests to work out adequate agreements.
Okay, thank you. Next, we're going to go to Gina, and then on deck is Ken Bosenkool, and then Anil just slipped a question in there. And we are down to our last 7 minutes, folks. So please, quick questions and quick answers. Gina, take it away, please.
Okay, thank you. Great presentation. And this question goes along with what Natalie asked before, because terms, I think, do matter. So I put it there. According to what you said, it is possible to enlarge the impact investment, right? And to include Canadian retail investors. But the targeted population mentioned here is quite broadly defined. So can you elaborate and help us understand if there's any particular groups or types of Canadians who would be more interested than others to invest in MSMEs in Kenya?
can take that one. Thanks so much, Gina. It's a great question. Indeed, there are some investors who would be more interested in investing in Kenyan SME than others. In terms of the particular types, I would say the characteristics are not distinguished by demographics, but by people's investment beliefs. For example, people who are risk tolerant and people who are actively seeking to invest in early stage businesses are more likely to do this as they can see the large growing potential of small businesses and they understand the high risk nature of investing in small businesses. Another type of investors who would likely to get involved would be people who believe in Kenya's economic growth and who understand the Kenyan SME markets. Some Kenyan diaspora, for example, would likely fit into this category. So overall, people who are risk tolerant, actively seek to invest in early stage business and people who understand Kenya well, like the diaspora population, would be the type of retail investors who would be more interested to invest in the Kenya SME. Thank you.
Okay, we are approaching, actually we're right in the lightning speed round now, the last few minutes. So Ken Bosenkool, and then Anil, and then Emily, and then Jennifer. Woo! Quick questions, quick answers. Ken Bosenkool, take it away.
I was astounded when I looked at what the UK had done and how quickly the ECF funding from the UK grew after they passed their legislation. And I believe in copying success. So, but I didn't see in your recommendations that you had explicitly linked back to what the UK did. So let me put my question this way. Why shouldn't Canada or Ontario just drop the UK regulations directly into their regulatory regime?
Yeah, I can tackle that. Like I mentioned, the UK has a very principle-based regulatory framework, whereas Canada does not. And so there's a lot of flexibility in terms of that. And I think that that's where the difficulty comes when it comes to the regulatory framework in Canada, whereas we'd essentially be telling Canadian regulators to drop some regulations and kind of, trust the platforms a little more. And I think that that's a difficult thing to ask. And I think it's just more realistic. That's why we kind of steered more towards the recommendations that we made, whereas we thought that that would be more feasible. The transition to more of a principle-based regulatory framework for equity crowdfunding is just seems not very likely. Whereas the recommendations that we've made to just change some of the exemptions are more attainable.
Okay. Sorry.
Yeah, go ahead, Danielle.
I have time to make a quick addition to that. I think I can maybe address Jennifer's question as well. And I think both Ken and Jennifer's question, part of what you're getting at, was why is Canada perhaps perceived as behind here? And I think Yvette did a very good job of explaining it, though I think one thing I would add to that from the Canadian side, while there may not be one exact reason, there's a couple contributing factors there. I think part of it is that Canada really isn't at the cutting edge of the securities market, and therefore not securities regulation either. And there's just less capital to be invested here when you compare it to the US and UK. So I think that there is perhaps less pressure for innovation. And I think part of this perhaps slow-moving pace of adaptation to innovation in the securities space here can be in part attributed to the nature of Canadian federalism and each province being able to set their own rules. And while there is a degree of regulatory coordination, it's not, the UK and the US do have single securities regulators.
Okay, Anil.
Thank you, Chris, and thank you so much to the team for this wonderful presentation. So I've been working in this field for a bit, and one of the things we've noticed is sometimes you can add to the dollars you invest in crowdfunding by providing a few other resources as well that can help stretch the dollars and also mitigate gender barriers, because we're working towards solving some of the gender barriers when it comes to financial markets and investments and returns on investments, etc. So I guess my question is, are there other resources we could provide to specifically vulnerable populations who are receiving crowdfunded dollars to stretch those dollars and increase our impact?
Thanks, Anil. By other resources, do you mean something outside of crowdfunding or?
Yeah.
So our research that we've been studying mainly focus on equity crowdfunding as a way, and crowdfunding as a way to basically have that crowd investment for different themes like climate change, gender equality. That being said, Canada now, I'm pretty sure through also your policy lab, you've studied that gender equality has been a main focus of the Canadian domestic and international policy. So we think that it can definitely be employed into the crowdfunding space if a platform is designed to have gender equality focus. And I think to actually having that focus would help equity crowdfunders or advocates to maybe get more blended financing support from the government because of that tie with the feminist policy. So in terms of Kenya businesses, there are definitely businesses that help women, support women's. For example, in the health service, there are suggestions of telemedicine to help to provide prenatal service for women living in rural Kenya. And there, during the pandemic, there has been, I think, a taxi service that was reserved for pregnant women who are due to give birth. So there are things like this, digital innovators that has huge potential to be supported, to be invested. The question is if the Canadian government is willing to open that door for Canadians to invest.
Okay, folks, very last question from Emily. It is to explain what you mean by conducting sandbox experiments with the regulators. So is there somebody from the team that has a lightning fast and wonderful answer to this final question?
I will do my best. I would say that means connecting with departments like the OSC Innovation Office to conduct small scale tests to simulate regulatory changes.
Wow, pithy. All right. Okay, folks, we're going to bring this to a close. This is the end of the fourth session, the end of our first day out of two. It's been a terrific day and a nice mix of cases, but save some energy also for tomorrow because we've got 4 more presentations. So thank you all very much for attending this session. Thank you to Engineers Without Borders. Thanks very much for sponsoring a policy lab with our MPP program. And we hope we can do one again in the near future. Dirk Druitt, thank you very much for being the coach on this team. And the team itself, Danielle, Camilla, Yvette, Asif, fabulous job. Great issue. I've got some more questions, but I'll do that offline. And that brings us to the end of the day, folks. So let's quit now, adjourn, I suppose is the term, and we'll see you all at 9 a.m. Eastern time tomorrow morning for Transport Canada. That's how we're going to start Friday morning.